Welcome to the NAMB Podcast, where we bring you the voices that drive the mortgage industry. Join dynamic hosts Ginger Bell and Matt Shields as they dive into bold conversations with top experts, industry leaders, and change makers from across the country. From insider insights to game-changing trends, this is your front row seat to what's happening right now in the world of home finance.
And we're back with another episode of the NAMB Podcast. My name is Matt Shields, and I'm so excited for our two guests today. We have two living legends for NAMB, and we have A.W. Pickel, past president, and we have Board of Director Doug Braden. Thank you, gentlemen, so much for being here with us today.
Thanks for having me. Appreciate it.
And A.W., I want to start off with a question for you. We were talking a little bit ago, and you were saying you had a bold prediction for the mortgage industry, and I would love for you to share that to our listeners.
Sure. I think by the year 2030, mortgage brokers will control over 50% of the loan origination production in the United States. And I say that for a couple reasons. I do think, at one point, and by the way, I was president a long time ago, in 2003, but we made that prediction back then. And an independent research analyst, Tom Lamalfa, with Wholesale Access, said he found that mortgage brokers originated over 2/3 of all the production.
Wow.
I think we're headed back to that because a lot of loan officers have learned with the advent of technology and today even AI, as well as they've been squeezed perhaps, or felt like they've been squeezed by the companies they work for. They find they can go out on their own. As they find they can do this, and the wholesalers are really willing to help them, then I think they see an opportunity, and I think you're going to see a huge shift that way.
And with a lot of the things that we're doing with NAMB, with the Hive and, helping with some education and with what we're doing in the government affairs and membership, I think we're just offering so much to brokers to help kind of fulfill that vision that you're seeing and that kind of prophecy that you're seeing of the mortgage brokers kind of taking back that stronghold of the market share.
I agree with you, A.W. I think 2003 was probably one of the first NAMB legislative conferences I attended. And
Glad
so
to hear
back
that.
then, once upon a time, right? That story starts with. But I agree. I spent some time as a mortgage banker and was thrilled to get back into the broker realm again. And the control that I have, the work model that I'm under right now is absolutely helping me to thrive again, being in the broker model. And I believe that the broker will continue to thrive, and partly because of NAMB.
Yeah, absolutely.
I think absolutely because of NAMB. I would also say that, two of my children who are now grown, happily married, and have children of their own, were in the mortgage industry. The third daughter, Jessica, and she was a phenomenal, and still could be today, but she's got a better job, mom.
That's a good one right there.
That's right.
That's the best one right there.
Yeah, I got 3 grandkids from that.
Congratulations.
But she was a superb loan officer, and she knew how to empathize. And that is everybody talks about AI taking away jobs, but I don't think that's going to happen. It will take away some, but it will never be able to replicate what a person can do in communicating to someone else. Yeah. When I come to this conference, and I've been coming to these conferences for a long time, and good to get to know you last year on the nominating committee, but I've known Ginger Bell for a long time. And it's almost like going back to your high school reunion, but no one's died. So you get to see everybody. Because when I go back to my high school reunion, they got this big wall, these people that have died, and I'm like, I don't want to see that. So, so I want to tell you, Jessica could empathize. Yeah. And Rebecca, my youngest daughter, is a corporate processor for a national bank mortgage company. And I asked her one time, because I was just learning this stuff, and I did have a pager, by the way, at once upon a time, a BlackBerry. We called it a crackberry because you had to pull it out and look at it. But I asked her, why do you text? Why don't you just return my phone call? And she goes, because if I return your phone call, you'll probably want to talk. And I've got other things to do. So, I learned from that. Texting, why texting was important. Yeah. I still don't like to text. I can't type that well now. So, but yeah, so that's a shout out to Jessica and Rebecca. Good going. So yeah, go ahead.
Yeah, I love the little shout outs to the kids there. That's awesome. That's awesome.
One more thing I want to say, and you can look these up. I graduated in accounting, FASB 133 and FASB 65. In short order, when a wholesaler buys a loan from a broker, they get to amortize that cost over a period of time, hopefully 4 years. Some wholesalers have been known to extend that by a certain range. And what that does is it saves money on the income statement side of things, so their earnings go up, and if earnings per share go up, it makes their stock look better. I think sometimes, it's the really simple things of why people do stuff, and I think they want brokers for that. And I think brokers should want to be brokers. We're the local feet on the street. Absolutely. They can't afford all that overhead. So, but we don't have much overhead.
That's right.
So we're the ones that are helping people make those decisions, and I think we're still helping them face to face.
And with where AI is going to go, I think people, even now, like I've gotten away from sending out automated emails. I've gotten away from a lot of the automated stuff, and I've just picked the phone up again, and I've noticed that people are craving that interaction. And I'm with you. I don't think that AI is going to do away with the compassionate side of a loan officer who wants to really sit down with someone face to face and really give them the knowledge and expertise. It's like Barry said earlier, it's information versus wisdom. Let's give them the wisdom and not just information. Like we need to give them that full package.
Agreed, Matt. I tell my customers, that's one of the primary things I tell my customers is that I answer my phone. I try to answer my phone. Yeah. That's its purpose, really, is to call people and talk to them. So I think that human element is always going to be the interaction. The mortgage broker has always been the low-cost alternative, keeping the big banks, from setting the market. Right. Because given that latitude and then with that range, I believe that they would.
Absolutely. And for the broker, it's like clients to us aren't a number. They're not a number. It's a customer for life. It's a client for life. You want to take care of them just as much post closing, after closing, and I think that's just that big difference that us brokers can bring to the table.
I'll tell you a story. When I started my company, Leader One Financial, and I've sold it. I'm no longer there, and they're doing a great job. But in 1993, we had a mini refinance boom. In 1994, my top loan officer came to me and he said, I have a cousin that needs a job. Would you hire him? I'm not going to name names, but he later became an undertaker. He didn't stay with me forever. He had one of the driest personalities I've ever met in my life.
Oh, man.
Good job for him.
So here's what happened. So we had people, we closed more loans. We doubled my projections for 1993. And I picked out 100 borrowers. And I told a little fib. I said, they're just random picks. Well, they weren't. Every one of them had a problem at closing. So I had this young man call each one in 1994 and ask them a series of survey questions. But there was only one question I wanted answered. Would you use us again, and why? You tell me, either one of you, how many people said they would use us again? And I mean, closings blew up, got moved, all sorts of problems. Minor to really big.
I'll guess half.
Okay, half?
We'll go 9 out of 10.
Wow. That's why you're up and coming. 99 out of 100 said they would use us again. And so then we asked them, why? Why would you do that? And they said, because we told you everything about us and we'd rather not go through that again.
That's a very good point.
They said they would come back just because, they felt like, and because one of the ways I train loan officers, in talking to people filling out the loan application, I'm going to ask you questions today that you probably don't tell your mother, your father, your priest, your pastor, your confidant, but you're going to tell me because I'm going to get your credit report and I'm going to see it all.
Yeah, I'll know everything.
Yeah. And they said, we don't want to do that very often.
I get it. It's invasive. You know, it's a lot of trust in somebody.
But that's the empathy I'm talking about, and that's what brokers can bring to the table. And that's what they will bring to the table. That's what they've brought to the table.
That broker, that originator, that loan officer, I think that a mix of old school work ethic and then using the new technologies. If you can use the technology to your advantage and still be that personable person, you won't get left in the dust. You're going to be the front runner for the industry going forward. Just mixing, you know, just the old school work ethic and just the technology advantages. Thank you for your insight on that. That was
well,
great.
I sort of had to learn a lot of things the hard way.
Right.
And by the way, Jessica and Rebecca, you're both doing great. I realized what I said earlier might have meant that one was doing better. Nope, both doing really well.
And that energy builds and grows, and I believe the AI is going to help with that.
Yeah.
And I remember Carl White, said with the mortgage marketing animals, he said, he talked about going to closings. How many of you like to go to your closings? Oh, I love to go to my closings, and I do. Yeah. I like to be there. I like to give out the closing gift. It's the Martini family toast, right? Here's bread, so your home will never know hunger, and salt, so life will always have flavor, and wine, so that happiness will reign forever, right?
I love that.
Love to give that toast at closing. But he said, can you go to 5? I said, well, sure. He said, could you go to 20? You start to get, well, maybe I couldn't go to all 20. And what if you had 40 closings in a month? Could you go to them all? And so the logistics of our industry, as you start to build, make it more and more difficult to have that interaction with people. Yeah. But that human touch is very important, and I think the broker plays a strong role in that because it's not a corporate phone number. It isn't talking to 5 different people every week about your loan. It's me. Yeah. It's me as the point of contact.
Absolutely.
So it's irreplaceable.
Yeah, we had single point of contact before CFPB decided it was a law.
That's a good thing. Ahead of the game.
Yeah.
I was cool before it became cool. What was it? No, there's a song like that. Yeah. I would like to add a couple points.
Yeah, what you got?
So this is 2025. So to get the broker where they're going to be, part of it is going to be just a natural occurrence of wholesalers wanting their business and good, ethical loan officers wanting to do their own thing. But the other part in getting there is recognizing guys like you and women like your age. It's really different. And the thing is, I remember how, so I started in 1988. And I was so excited, and it was fun. And I got up early, and I went to bed late. And I would go out and take a loan application at 7 o'clock in a snowstorm if I needed to. But I'm not there today. But guys like you've got energy, and you're taking the technology. And I have just took a loan the other day from my attorney. And I work with several wholesalers. I don't know if we're supposed to mention those, but we can. Okay, that's good. I got the high sign. Rocket, Plaza, I think it's the Loan Store. And there are several good ones, and every one of them are here. Yeah. I've got friends in this entire industry. It is like a high school reunion. Yeah. Maybe college. So they make it easier for you guys, and you guys pick it up so quick. I'm impressed by Mike Farrell. He's brought so much technology in with the NAMB app and bringing in Guideline GPT, and now that same company is, I know, going to offer to NAMB Scenario AI. Yeah. Right. So, yeah, we older guys, I think one of the rules for my life going forward, I need to lift up, listen more, let go, I got another L. But anyway, in lifting up, what I mean by that is I need to lift you up. I need to lift up those people. I don't need the spotlight, not anymore. And quite frankly, I always liked it, as my wife would tell me. But, right now with this white hair, it's sort of glaring. So, I got to lift you up.
Thank you so much. I'm honored that you said that about me and the energy aspect, and thank you so much, AW.
Megan Anderson? She's a dynamo.
She is. She is so good at what she does.
She is.
She is remarkable.
Yeah, I wish I could think of all the other, young people I know to give them kudos and credit.
Well, we're not the only two right? Me and Megan, right?
No, I know. I have 13 grandchildren. They're all young. I know them.
Thank you so much for saying that. And yeah, Megan Anderson, she's a workhorse. She's out there traveling and podcasts and marketing and doing her thing. And it's nice having leadership to look up to. And Doug, I want to pivot over to you for a question.
Sure.
You've been in NAMB for a while now, and you've gone to the Ledge Conference, and your passion and your love for veterans has now turned you into an educator for the CVLS course.
Yes.
Mind please telling me about what got you there? And
Yeah, I'd be
what that
happy
means?
to. I look to NAMB as advocacy is one of the key roles, but education is a close second. And so I believe the education piece of NAMB is incredibly important, especially for the brokers out there to keep them elevated. And for me, I changed my focus about 10 years ago and really started to understand how veterans don't understand their benefits. They don't really get told about their benefits. In the TAPS interview, when they exit the military, they pat them on the back and say, "Good luck out there." So they don't get an idea of what their benefits are. And only the statistic is about 11% of all veterans. That's only 11% have used their VA benefits.
Oh, wow.
And that's a staggering number when you think about it, because that's one of the greatest benefits they have coming out of the military is the ability to buy a home with no down payment and with no loan limits now.
No PMI, no down payment.
No mortgage insurance, no loan limits, and almost 60% of veterans are exempt from the funding fee, so they don't even have to pay the funding fee on their loan. Yet the program still thrives with those veterans who do pay the funding fee, and it's revenue generating. So it doesn't rely on the federal government for funding. The funding fees that are paid by the veterans take care of that.
Right.
And so I've been on a mission. I do a 2-hour CE credit class for realtors in Colorado because I really want to get the word out and make sure they understand the VA program. The ability to get an appraisal is not hindered anymore. There's no issues. Now there used to be with the VA, it used to be a little clunky, used to be cumbersome. And those old rumors and myths are still out there with consumers and with realtors.
Yeah.
And they don't understand. So they say, "Oh, no VA offers." Well, when I see that on a listing, it makes me say, "What's wrong with the house?"
Exactly.
Because there's nothing wrong with a VA loan. It's the best way to purchase a home.
Amen. And they
hands
deserve
down.
it. And they deserve it for everything they've done for us. Absolutely.
They get a better interest rate because of the government program, 0 down payment with no loan limit. I think the highest loan limit that has been done with VA was in Hawaii at $3.4 million.
Wow.
With no money down. The biggest one in Colorado, I think, was $2 million, I believe, or a little over $2 million. Because rocket scientists make good money.
Right, yeah,
so they can qualify for those homes,
Yeah,
So I love getting the word out about veterans, and Jeff Wilson and Rick Betancourt have been kind enough to mentor me in teaching the class, and I've co-taught the class twice now, and I'm looking forward to being an instructor for NAMB.
Well, I can't wait to take the course through you. I need to renew my certification here soon, so I'm looking forward to that. And
Can we say one other thing about VA loans?
absolutely. What would you like, sir?
Yeah.
So, you remember 2006 and 2005?
Okay.
We had a number of 100% loans then.
Yeah.
And how well did that work out? Not so well. So, the VA program has been 100% loan since it came out.
Yeah, that's a great
And look
point.
at the track record and the credit quality. I think that speaks to our service members
Amen.
Absolutely.
Amen.
and the quality that they bring to the table. But, no one ever, when they start talking about us on television, and they say, oh, those lenders, those subprime guys, and there is a place for that, but we have a 100% loan that has a huge, phenomenal track record, and it's due to the credit quality of our service members.
Absolutely. Thank you for pointing that out. That's a great bit of knowledge there.
It goes back and forth between the conventional 20% down default rate. VA default rates are just as low. Right, or
Wow.
let's say the rate of
Being
veterans
100%
making
financing
their
compared to a
100%,
20%.
They're
yeah,
still making
that's-
their payments right
That's
on
great
par.
information.
Some people that have the skin in the game, if you will.
Right.
Like people.
38% of the subprime loans, the 100% loans, first and seconds that were done in 2005 and 2006 eventually did default. 38%.
Wow. Wow. That's way too many.
Was a change in the marketplace as
Well,
well.
It crashed several securities, is what it did. Yeah, number of defaults ended running the tranches.
Well, gentlemen, I am honored to speak with you both today. I really am. I look up to you guys. I appreciate everything you've done for organization, and I'm happy to be a part to help carry on the legacy you have created.
You better, I'm going to come get you.
All right, well, you ain't got to worry about that. And to our listeners, you heard great legends of NAMB having a phenomenal conversation. And get involved. We're looking to grow our membership, and we would love to talk to you. Please reach out to us. And you can find our podcast on Spotify, Apple Music. You can find us on NAMBpodcast.com. And looking forward to having you next time. Thank you so much.
Thanks for your passion too, man. Appreciate it.
See you guys.
You guys. Bye-bye.
Thanks for tuning in to the NAMB Podcast, brought to you by the National Association of Mortgage Brokers. For more episodes, resources, and guest interviews, visit NAMBpodcast.com. Don't forget to follow, share, and subscribe, and we look forward to seeing you soon.